All right. Hello, traders. You guys should hear me now. Sorry it took me a little bit longer here to get this set up. Whenever I simulcast, it's a little bit cumbersome. I apologize for that. But anyway, fixed the sound problem that, caused a little bit of a technical situation in my previous video. Anyway, thank you all for joining me. This is Mark P. Markets, Mark Principato. We're going to do today, what I want to do today is a watch list real quick. Okay, I want to spend maybe the first 10 minutes on a watch list, a couple of items that I'm looking at, and then we can go into your questions. So I want to spend more time on your questions. Okay, cool. All right, cool, DJ. Hey, nice to see everyone in the chat. All right, so let me get this thing started. Obviously, this is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right, now let me just get my platform up here. Just give me a second, and I'll have this up here in a moment. Hold on. Again, I appreciate your patience, just running a little bit behind here. All right, so we're going to start with, today is Monday, right? So we're going to start with the economic calendar real quick. Hold on a second. Let me just get this thing going. Just 1 second here. All right, I'll have this up in right now. All right. All right, so again, here, let's get this going. All right, and you can see me. So, technology, right? All right, so anyway, again, thank you for joining me. So if you're new to the stream, by the way, put your symbol in the channel now, whether it's a stock, whether it's a coin. If it's a coin, please put USD or USDT after the symbol so I don't spend a lot of time on the wrong symbol. All right, so again, I am simulcasting on TradingView today, so just so you know. Now, so let's say hi real quick to my one chat here. I see Travel with his long question. Always writes these really long questions. I spent 10 minutes answering the question the other time, and there was no sound. Anyway, Alex, good to see you. HS, good to see you. DJ, Gabriel, cool. Hey everyone. Sean, all right. MZ. So let's first go over the economic calendar real quick. I want to try to spend the least amount of time as possible on this thing. All right, so today is Monday, right? And let's see what we have here today. Interest rate decision for China, which was out. Oh no, it's at 9:30 p.m. tonight, Eastern time. Interesting. Okay. We have Australia meeting minutes, the Royal Bank of Australia. That's not really a big deal. I wouldn't worry too much about that. For the pound has been on the move, right? So we have some news for the pound. That's tomorrow, right? 4:20 at 2 a.m. Eastern time. Claimant count change and ILO unemployment rate. Those aren't big numbers. I wouldn't worry about these. Then you have at 6 a.m. Eastern time, ECB bank lending survey. Again, these are not big numbers. Consumer price index for New Zealand. That's at 6:45 p.m. Eastern time tomorrow, the 20th. No big deal there. Okay, and then we have Australia retail sales. Again, these aren't big market movers. On the 21st, GBP, pound, consumer price index, and Governor Bailey's speech. Again, wouldn't worry about that stuff. 421, we have the Bank of Canada. They're obviously having their monetary policy report and their rate statement. Could affect the Canadian dollar, right? So if you're in that, they have their rate decision and their press conference. That's all between 10 a.m. and 11:15 a.m. Eastern time. That's on the 21st, okay? So that's Wednesday. Again, it can affect you if you're in the Canadian or anything. Maybe if you trade Canadian stocks. Then we have here on the 22nd, European, our ECB deposit rate decision. So their interest rate decision also on the 22nd at 7:45 a.m. Eastern time can affect the euro, and the euro has been on the move too. So definitely want to keep an eye on that if you're involved in those pairs, or maybe even European stocks. 423, you have Germany, market manufacturing PMI. I wouldn't worry too much about that. And that's pretty much all I see here on this calendar. I don't see any FOMC meetings. I don't see any testimonies from Fed Chairman Powell. So that's a good thing, right? So we don't have a lot of news in the way. Now, it doesn't mean something unexpected can't come out and surprise everyone, but at least for scheduled economic news, okay, cool. So that's out of the way. Now, let's get into my watch list, what I'm looking at real quick, and then I want to get into your questions. Okay, so again, thank you for your patience, and thank you for joining me. All right, so hey everyone over at TradingView, good to see you. All right, cool. So let's start with Bitcoin. You can see my Bitcoin chart, and as you all know, Now, I wrote an article yesterday on TradingView, and in that article, I talked about this level up here. You could see the range, the reversal zone boundary area, and I've been talking about that for weeks. Okay, in fact, from peak to peak, it took about 5 weeks for this thing to play out. That's a very important thing to understand because, you know, everyone has all kinds of opinions and everyone's all this and all that and all this hype and all this nonsense all over the place. Meanwhile, we're in a high risk area, which I've been pointing out over and over and over. No one wants to hear reality though, okay? And that's what I pretty much offer, reality. That's why I'm so unpopular, but that's okay. So the point is, it reversed, okay? And now people that are caught in this, if you're caught, the mistake you want to avoid here is hope mode. Don't get in hope mode. If you've believed someone because they said Bitcoin was going to 100,000 by next month and you bought the highs, you're stuck now in the highs. So you're at the mercy of the market. What you need to do in these situations is try to minimize your risk the best you can, okay? Now, hopefully, if you don't have a large position, the goal would be to take a loss somewhere in here because here's the thing. We can sit here and we can hope that this thing holds here around where it's trying to, the 55K area, but this is not a major support, okay? 57K was a potential area, but that wasn't major, right? The major support is 50K, and as we can see, there's a tail off of that large candle that we had yesterday. And by the way, this news came out of nowhere, right? There was a power problem in China or something like that. I mean, that's what I saw. They had some kind of power problem or whatever. No one saw that coming. How come the experts, all these experts calling for Bitcoin long and all these other altcoins? I mean, I was on YouTube on Friday. I was just looking at videos, right? There was dozens and dozens of them all calling for all this ridiculous stuff, which has been going crazy. I'm like, man, this is not good if you're buying. So anyway, I didn't know that the top was going to show up like this. All I knew was the risk was high, right? So my point is this. We touched that low. We touched that near 50K, all right? And it's trying to bounce. This is still not enough information, right? This is still not enough for me to get long for a swing trade. So I stay away from this. There's no structure. It needs to spend some time fooling around 50K. Time means a few days, okay? So as far as the watch list goes, Bitcoin is on my watch list for a long, but I will not step in front of it here. I want to see 50K or somewhere between 50 and 48K. And what I want to see develop there is I want to see in this area, I want to see like a double bottom develop. I want to see a pin bar develop. I want to see something, and it would be nice if it can give me a little structure, meaning it just doesn't go there in one candle and then bounce. You know, I would like to see a series of candles, maybe 3, maybe 4, which could basically take the whole week. So again, I'm speaking from the swing trade perspective, okay? If you're thinking of day trades, look, day trades around that 50K area, great, but you have to be on top of it because if it breaks, you're looking at much lower prices. So there's no way to know if it's going to break. But again, all the experts, why didn't they call this? Why didn't they say, oh, here we are, risk is high here, you know, 50K is next? It's because they don't know what they're doing either, okay? They're all, anyone that consumes all of that blind optimism, this is the risk you take. So I focus on risk, okay? Risk first, and the risk said too high. Now, risk is much better here. I definitely like the lower risk, but it's not low enough. I want really high probability, that's 50K or slightly lower, right? So that's number 1 on the watch list. Now, let's go to number 2, Litecoin. All right, so LTC USD. Let me just check the chat, make sure that I'm not, people are hearing me and stuff. Okay, cool. All right, see lots of questions. Great. I'm going to get to your questions, everyone. Let me just run through my watch list first, and I really appreciate your questions. All right, so Litecoin, right? Here it is. Same situation as Bitcoin, same idea. Again, hopefully you didn't get sucked in up here, but here's a nice learning lesson right here. Look at this pin bar. So when you buy a breakout, and I talk about this all the time, if you buy a breakout, and I talked a lot about this on Thursday, and you get this candle right here after your breakout, you get this nasty red pin bar candle, you are in a fake out. Once that candle closes, most likely you've been faked out. Once the low is taken out of that candle, the sell signal is in progress. That's when you could make an adjustment, right? And that's when, as a day trader, you need to be decisive and take the loss. I mean, that's part of the game. If you don't take the loss, you run the risk of getting caught in something like this, right? You start out with small magnitude risk, and then you expose yourself to large magnitude risk. That is how you wipe out accounts. So Litecoin, why is it on my list? Because I like these levels right here. Just like Bitcoin, it's very similar. So the low 240s area is the target area, or I should say the area of interest. Now, if we get an inside bar today, where it's fooling around right now, I'm still not interested in that because it's not close enough to my level. Now, again, you can't step in front of levels because they're highly random. If Bitcoin breaks, these levels are going to break. Okay, so what I want to see with something like Litecoin, I would like to see another test of those low 240s, maybe slightly lower, followed by some kind of bullish reversal candle, right? So Litecoin is on my watch list for basically the same reasons as Bitcoin. Now, let's take a look at Theta. All right, now this Theta is a perfect example of a failed breakout. You know, I've been watching a lot of these authorities, okay, and they've been basically on top of these consolidation breakout trades. You make $1 million by tomorrow. Just take it's easy, right? They make it look easy. Anyway, so not all of them, when they work, okay? But when they don't work, what separates the professional or the experienced trader from someone who has no idea what they're doing is the professional knows that the failure is in progress and they get out and they take the loss, okay? So this is a great example of a failed breakout. You bought this thing at the breakout, it turned around, you get out, okay? You don't go into hope mode. I know I have to repeat that a lot, but hope mode is what leads to those large adverse moves, because now you're opening up yourself to the possibility of being caught in that move. Now, I like Theta for the watch list because I like these levels. Again, very similar to Bitcoin, very similar to Litecoin. Now, it has this consolidation. I like that. I like that it's testing the lower part of that range. So again, can't step in front of this, but I like the location. So it's on the watch list. What do I want to see here? I want to see a bullish pin bar. I want to see an inside bar develop over the next couple of days. And if it can hold that support, then this is at least worth a try. All right, and again, the prices I'm talking about are around $10, okay? This thing right now is at, what, $10.94? So this thing needs to pull back like another dollar, basically, before it's in a very, very attractive, area or higher probability area, followed by the setup. If there's no setup, you stay out because the risk is too high. What if these things break and keep going? What if Bitcoin breaks its support? No one thought it was going to break support. Hey, Bitcoin can't pull back. It just doesn't pull back. These things are going to make you a millionaire tomorrow, right? That's what all the hype was saying. Meanwhile, it cleared 57K like it wasn't even there and went straight to 50K basically, okay? So, and that's nothing. That Bitcoin move is not even a real pullback. That's just like a healthy little, okay, that's just a little sell-off. That's nothing big. All right, big is like you clear 48K and you go to 40K. That's more significant. That's potentially trend changing activity. Right now, it's still in a bullish trend. We can argue. So anyway, Theta is on the watch list. Good level, needs to form the setup. All right, now let me jump over. I want to show you two more, and then I'm going to answer your questions. Okay, so let's go to the Nasdaq. Now the Nasdaq, this thing was. See this purple, this blue box up here? It's the reversal zone. Now, a couple of days ago, I sent out SQQQ. In fact, I was criticized for sending out SQQQ, and I was asked to rethink my position. But I don't pay attention to people. I pay attention to the market. The market tells me what to do. Now, this situation up here is a probability game, okay? I don't care about the news. I don't care about the optimism. I have no opinions. I don't care about the earnings that are coming out this week. I don't care, okay? What I do care about is a high probability location where price is highly vulnerable. That I do care about, okay? So I was willing to step in front of this and play that game. It was risky, yes. Counter trend, yes. But here's why I'm putting this again on the watch list. If you look at the SQQQ, it hasn't even really started to go yet. So this is still a play that you can work with. Now, I bought the call options, right? And I didn't buy like a month out. I bought January call options, which at the time were around $2.50. Right now, I think you can get these for about $2.20, something like that. January, that's 8 months. Okay, so that means basically you're renting 100 shares of SQQQ for about $30 a month. That's basically how you can look at it. And if the market pulls back, this thing, and I'm talking about the, what was it, the January 14 call, all right? This thing right now is at 1094. So 14 is out of the money. It's not too far away. But if there's a dramatic move in the Nasdaq, and again, it's in the location to produce such a move, those calls can double, right? And that's all I'm really looking for, a double or maybe a triple. That's a little extreme, but hey, it can happen. The Nasdaq can pull back to this 13,200 area. And that's what I'm looking for, okay? And that's not even a bear market. That's just a normal pullback, all right? I'm not talking about bear markets here. I'm just talking about probability, something you can't see on a chart. And the risk was very high at these levels. I would not be holding stocks long. We had a couple of trades of the week. They're getting stopped out. That's a risk you took. You know, I made sure that I put that information when I sent those things out. You're going against a very vulnerable Nasdaq and S&P. So those are very risky ideas because there are longs near a market peak. Okay, so if this thing pulls back to 13,200, if there's some earnings that come out this week or some other unexpected news that knocks the wind out of the market, you're going to see the ugliness. Okay, so that's something to keep in mind. You can't just blindly buy stocks just because, you know, Kramer talks about them. You have to know where you are in the bigger picture. So SQQQ on the list, okay? It's still a good idea right now. You haven't missed it yet. And there was one more, yeah, CGC. Now talk about stocks. Now here's a cannabis stock, right? And this is an old trade. That's old, so don't even. That never actually became active, and it stopped out anyway if you had taken it, but it never actually became active. My point is, this is an attractive level, right? It's a stock, as you know, it's a cannabis stock. It's at an attractive level. The sector has been beaten up. Today's candle looked a little bit better earlier. Right now we have this outside bar, but this is something you want to keep an eye on. If this thing can find some sort of reversal activity, all right, this week, this might be a decent idea for a swing trade, okay? You're going back, you have this nice gap over here. It's going inside of this gap area. And those gap areas tend to act as support or resistance, right, over the bigger picture. So just something to keep in mind. I'm not saying buy this thing now. What I'm saying is if this thing can't take out that 26 area, if it struggles to take that out while the market is pulling back, then when the market finds some stability, even though this is not a market stock, that's a good sign, right? That means that no one's selling this thing. Because look, when we had that massive sell-off a year ago, all these stocks got hammered, whether they were correlated or not. I mean, CGC went to $7. So just something to keep in mind. If this thing is struggling to go lower in the face of a weak market, it's a candidate. So I'm watching it as a potential swing trade. So that's my list, all right? So again, that needs some more structure, but these are levels you want to keep an eye on. All right, so thanks everyone for listening to all that. Let me see how I'm doing with time. Okay, not too bad. So I'm going to start answering questions now. All right, so again, if you haven't put your question in the chat, please put it in there. Let me make sure I'm doing okay with the chat. Okay, cool. All right, so let me go back. I'm going to start with this one here, Travel Berlin. Hey, so he wrote a really long question, so I'm going to try to get through this quickly. In the perspective of a phase of price correction, I've been trying to determine over effective and consistent amount to hedge the value of my Satoshi portfolio. Okay, I have come to the conclusion that it's more effective and easier to simply watch fiat money rather than shorting Bitcoin when price and correction phase. Okay, which in terms of trading simply means staying fiat. Okay, fiat. When the price drops in order to maintain your capital. But when it comes to position trading, okay, like an investment, which hedging strategy do you use, if any? How do you prepare yourself for potential? Okay, I don't know about you, but I don't like having my funds frozen in the expectation of a future bull run. All right, that's a good question. So basically, the question is, how do you protect yourself? You know, if Bitcoin and the rest of the sector goes into the garbage zone for the next year, which is possible. We saw after the 20K peak, you know, back in 2017, 2018. Bitcoin and pretty much all the altcoins were garbage for 2 years, right? So can it do it again? Sure, anything is possible. Although there's a lot more interest in it this time, you know, who knows? I don't have any opinions on that. But here, to answer your question, though, I mean, I would, as far as hedging goes, there's really, you know, I mean, you could use futures, but there's no reason to get all complicated. You could use options even, right? They have options for Bitcoin on some exchanges, but you're asking for complexity. So the best thing to do, you mentioned in your question there, going to fiat. I mean, that's really your best bet. You want to go to, or a stable coin, right? Just put it in a stable coin and wait until this thing pulls back. Now, when you're playing the bigger picture game, the idea though is to manage your risk with size. So if you're near highs, hopefully you've taken profits and you've reduced your size, but you're going to hold on to a core position no matter where it goes. The thing is, when you play the bigger picture, you don't want to be 100% flat, because the thing is, these things are highly random. So this thing may find support at 50K, right, or something like that, and next thing you know, it's at 70K over the next 2 months. I mean, again, you can't predict that stuff, but the whole point of buying and holding for the long term is to be able to sit through all the noise and just ride the bigger picture fundamental situation, all right? Which means, you know, if it pulls back for 2 years and turns to garbage, you have to sit through that. But the thing is, there's no need to sit through that with a large position. So you reduce your risk, okay? And you still keep on some just in case it starts going higher again. But if it doesn't and starts breaking major supports, then you hold off, right? You're not going to add some until it really starts getting attractive. And you're looking at like 40K. That's really, for me, the long-term place. I mean, everyone wants to get involved like right away and blah, blah, blah. I don't touch these prices, not for long-term, no way. All right, I know I want extreme prices for long-term, and that's 40K. And if 40K is taken out, that doesn't necessarily mean bear market, but it does signal a consolidation, all right? And that's where my outlook will change from short-term bullish to short-term range-bound, okay? Long-term, for me to be bearish, this thing needs to take out like 20K. I mean, you know, it would take a lot for this market for me to get bearish. But you know, medium term or whatever, it can go into in a range, and that's what I'm looking for next. Often when you have, I mean, let's take a look at a weekly chart real quick. And this is where weekly charts, oh, hold on. This is where weekly charts can be helpful when you're dealing with, you know, longer time frame strategies, because I mean, look where you are, okay? I mean, look where you are. So from the weekly perspective, these are bad prices to be putting on more and buying more and investing more and blah, blah, blah. You're near highs. So I want to see if this thing gives you like a 50% pullback, that's a great place to be investing, all right, and taking a small bite. So the question you have to ask is, and I know this is a long answer, do you want to hold on to whatever you have for that kind of pullback? Probably not, right? So you're better just reducing your exposure by reducing your size at these levels and then waiting for better levels if the market provides that opportunity, all right? You know, and you'll be surprised. A lot of times they do, and especially with the kind of hype and nonsense that's going on in this market. Okay, so that's my answer. I hope that helps. Let me jump over to the other chat here because I have a lot of questions and I'm not going to be able to answer them all. All right, so let me see what I got. So G Mantle and Benil, hey, good to see you from New Zealand. Nice. Stewie, cool. Hey, Stewie. Good morning. All right. Bitcoin support levels holding very well. Well, I mean, for the moment, but you know, I wouldn't touch anything here. Not for a swing trade. Okay. Position trade. This is like a small bite area for a position trade. Day trade. Hey, plenty of opportunity for day trades. All right. But the thing is, you take small profits on day trades. You take your money when you can, and you don't sit there and hold it because you expose yourself to a lot of risk. All right. Let me see what else we got here. Seems no buying is done. Fear factor. Okay. NY Greek. Not sure what you mean by that. But I mean, thing is, look, people are going to get very pessimistic near lows. You're going to have a lot of bears come out. They're going to say stuff like, oh, Bitcoin's going to 3,000. Or Bitcoin's going to 30K. We're all going to short it. Right. They're going to say stuff like that. They don't realize that they're fighting the bigger picture trend just yet. They're just happy to get any kind of pullback, right? So we have a lot of levels to go through before I get bearish on this thing, and there'll be plenty of buying opportunities. So I wouldn't put any weight in that. All right. So let me see what else we got here. Do you believe Bitcoin correction? Well, there's no structure, right? So the thing is, Bitcoin correction is in play right now. It's in progress, and we have bearish candles. I don't see one bullish candle here. We have this potential inside bar, or this potential doji here developing. The market's still open, right? The candle hasn't closed. So this thing there's not enough structure. It's possible that we bounce up. It's going to get everyone excited, but I don't touch it because the level doesn't provide a good enough probability for me. So I want to see a retest of 50K. That's all I can say, right? The market either shows me my scenarios, it shows me it aligns with my rules, or I take no risk. It's either one or the other. I don't bend for the market, okay? I mean, it takes a lot for me to make an exception for the market. Now, DDs, hey, thank you. 500 coins, thank you so much. Good to see you. Hey, been out for a bit. What are your thoughts on VeChain? Cool, I'll get to that definitely. Thanks for asking the question. Hold on here. All right, cool. All right, so let me, so that's the Bitcoin situation, okay? Let me run through the other chat here. Again, I want to try to answer as many of these things as I can. I usually run out of time. Alex, hey, wondering if you ever use moving averages for analysis. Okay, good question, Alex. Moving averages. Here's the thing. I don't, not for analysis. Moving averages basically help you with a trend, with a trending market. But the thing is, when the market starts to change, the moving averages will confuse you. So they're a trend following tool, like a trend line. All right, as you can see, I have these converging trend lines here. So I don't use moving averages. They're better on smaller time frames for smaller time frame strategies like day trades, because bigger picture, they will confuse you. All right, so to answer your question quickly, no, I don't. Not for this type of analysis. X-Rods, thank you so much. Thank you. 100 coins, thank you. You guys don't have to send me that, but I appreciate that. Thank you. I really appreciate the feedback. So, good question. HS, I hope you're doing, thank you, HS. Travel, maybe this time the microphone is working, right? Yeah. HS, can you please look at, all right, I've got a couple here, hold on. HS is asking for, well, and I just missed your question there, HS. Hold on, I'm just going back. Can you please look at Theta? Okay, so I covered Theta in the very beginning. It's on my watch list. Reef and Win USDT. So I'm guessing Reef is a stock. Let's see, REEF. No, maybe not. So let's take a look at maybe Reef USDT. So I'm guessing it's this coin here, Reef against the dollar. All right, so let's take a look. All right, I like here right away. All right, first thing I'm looking at. Oh man. All right, so recent price action. I see that structure right there. This, whatever this is, right? Whatever that red candle is when it opened, whatever. Okay, I'm going to ignore that because that's maybe when it just came to the market or something, or maybe it's when it first came to Binance. I don't know what that is, but I'm going to ignore it. What we have here is a broad consolidation. So, and the consolidation has started after this initial push, right? This little bullish trend situation that was occurring back in February, when most of these things were making ridiculous moves in February because there was a lot of hype all over the place. Anyway, so one lesson I hope you take away from these things is you need to stop listening to people, even me, because the idea is you need to be able to identify these levels for yourself and respect the random nature of the market, and also be able to evaluate the risk. If you focus on risk, you'll do a lot better than listening to these people coming out and saying, oh, I'm going to give you the top 3 altcoins. They're going to make you a millionaire in 3 months. And here, watch my video for 15 minutes and they get 100,000 views, right? And I'm like, and I watched the video and I'm like, they didn't give me any levels. All they're telling me are reasons why this altcoin is going to 10x. Oh, this news is going to come. Just don't pay attention to that. Please don't pay attention to that. Do yourself a favor. Now, all they stimulate, by the way, is hope. And hope is not good for you, especially in the market. The market doesn't care about your feelings. The market is random. It's highly random. And you need to understand that, and you need to respect it. It's very important. Okay, now, Reef USD. I like the range. We're near, and I like this price action going toward the range low. The range low is 0.328. So basically, just what, 3.25 cents basically is what that is. And we're getting near that. Today's low is 0.330, right? So it's kind of near there. Now, this is a attractive location. All right, I like that as a potential long area. At least you're not buying the high of the range. The problem is Bitcoin, right? So the question that this thing needs to answer is, what if Bitcoin breaks the 50K? We still don't have an answer. Remember, it took 5 weeks for Bitcoin to go from peak to peak. 5 weeks. So that my point with that is, these things, they provide their answers very slowly. So they require a lot of patience. So the question that Bitcoin needs to answer is, does it break 50K? And if it breaks 50K, what does this thing do? So if you want to buy this near that range low and Bitcoin breaks and this thing starts breaking that support, that's when you need to take your loss. Because it's not a good idea to take the chance. Because if Bitcoin and the altcoins go into their elongated, unpopular time like we've seen before, coins like this can go back to these range lows, right? Back to like, what is that? 0.006, whatever, less than a penny. I mean, you don't want to get caught in that. So you have to be quick to take your losses if you're in that scenario. There's no way to predict if that scenario will occur or not. It's if the market delivers it or not. So you need to stay on top of that. But that's what I'd say about this. I like the location. Use Bitcoin as your guide, because clearly when Bitcoin really starts to get people worried, as you can see, these coins are following, right? Okay, so that was one, Reef. He had another one on here. Hold on, let me get to it. So with Theta we did, and then WIN, WIN USDT, and then I'm going to jump over to the other chat. All right, so again, perfect example. Look at this initial push, right? How many people got stuck in that mess? This is why whenever I see these, and all of you know who've been watching my videos, all of you know, whenever I see this, here I'm going to cover the red part, right? Whenever I see this, what's the first thing I tell people? If you're in it, take something off the table. If you're not in it, don't chase. How many people, you've seen me say it, okay? And this is why, because this is what you're facing, all right? That. So why not wait for that? It'll come. There's nothing to be afraid of. People always talk about fear of missing out. There's nothing to be afraid of. You know why? Because in financial markets, there are always more opportunities, always. You know how many opportunities I've missed? I've been in this game more than 20 years. Do you know how many opportunities I missed? But the funny thing is, there are always more opportunities. And you don't lose money missing opportunities. So that's why it's like, let it go. It'll come back, or there'll be another opportunity. So anyway, my point is, let me get off that rant. My point is this. For something like this, okay, you're getting into an attractive area. You have the range consolidation, and it's a small range. Okay, fine. Now, again, similar to that other one that you asked me about, and similar to Bitcoin, right? And similar to Reef, you're near that range low. And the range low is around 0.0013. All right, so you're fooling around there. These kind of coins, I don't like them as swing trades when they're this cheap. There's a lot of noise in them. So right away, the best thing to do is look at a weekly chart, okay, and let something develop on the weekly chart. When you look at the weekly chart, you see there's a lot less information, right? So all you have is a potential inside bar developing here. Let the week play out. If it takes out this weekly low, stay away from it. If it takes out the weekly high, right, or the current candle close, and we have the whole week. But if the current candle closes and 0.0154 is taken out, then you have a break of the weekly high, and that may be a good time to start maybe building a position. But with these, I would play more of them I'd play them from a more longer term perspective, because there's just too much noise. All right, and they can spend a lot of time doing a lot of nothing, and there's no reason to get all caught up in that. So again, figure out a target allocation. Like maybe you want to invest $1,000, for example, and you say, okay, you know what, I want to buy $1,000 worth or whatever, but you're not going to buy it all at one price. So as this thing develops its weekly candles, you can use that as a reference. All right, so don't get too caught up with these daily candles on something that's so cheap. I like to see these coins moving, coins that are like over $5, $10, $15, anything over $100, anything beyond those prices, they move. So they're good for swing trades. They're much better candidates than these sub-penny ones. Okay, so thanks for asking. Let me jump over to the other chat. I'm trying to be quick here, so I really appreciate all your patience. Let me see. All right, so, okay, ADA. All right, I haven't gotten that question in a while. ADA, Cardano. So let's take a look. Interesting. So this one is a heavy hype coin. All right, we all know about. I've seen plenty of videos on this coin, altcoin, and failed breakout situation. All right, so like I said before, You know, a week ago I was telling people, look, if you want to take the breakout, go for it. But if it fails, get out. Get out. All right. And here you go. This is why. When you get a failed breakout, you have to understand there's a psychology behind it. You know, when everyone's piling into that breakout, you and everyone else, and it doesn't go, that means you and everyone else are now long. And when they realize that there's no real buying, everyone else starts getting out. And now you have to decide what to do. So the people that are usually getting out are the ones that are quick about it, right? They usually have more experience or, you know, whatever. People that get stuck in these things are people that hope. So again, here we are. ADA, if you're stuck in this, I don't know what to tell you. Hopefully you didn't buy that breakout. But now you're back into the middle of the range, right? And it's trying to find support. You have an inside bar developing right here today. Now, you have a couple of good things going for you here. The broader trend is still bullish, right? Nothing has changed there. The range low is around $1.03. So you're basically looking at the low dollar area, right? And it can test that range low. So the thing is, if you're in this thing now and you don't like that idea that it can go that low, then you should probably reduce your risk, take some losses. You know, that's part of the game. You're better off taking a smaller loss than a large loss. Believe me when I tell you. Yes, it's frustrating at times, especially if the market turns, but you can't let that bother you. I know that's easier said than done, but in the long run, it's healthier for your account. So my point is this. If it goes to that dollar area, that's the place to be looking for Cardano for a long, all right? And it's hard to believe that it'll get there, but it may get there, it may go a little lower, especially if Bitcoin starts to worry people, right? What if Bitcoin clears 50K overnight, all right, whatever, and we get up tomorrow or the next day and we see it's at 48.5. Where's Cardano going to be, right? And there's no way to know. So if Bitcoin is going to pull back, you know, and Litecoin and Ethereum, I'd be looking for this level here. That's your highest probability area based on this formation. If that level is cleared and this thing is back at like 80 cents, that's not good. That is not what you should see. If it's a swing trade, you should get out, take the loss. If you're in an investment, well, hopefully you didn't get too big too fast. Okay, that's when you're investing in these things. It's a good idea to start small. And as it starts pushing levels, you can put a little bit more and a little bit more until you reach your target allocation. Once you have your target allocation, you're done, right? And that will protect you in case, what if Cardano goes all the way back to 20 cents? People, oh, I'll buy tons of it. Right, but what if you bought your ton of it at $1 and it goes back to 20 cents? Not a good idea. So you have to protect yourself with size. I can't emphasize that enough. Okay, that's the mistake that people make with the dollar cost averaging. They think, oh yeah, just buy more, just keep buying more, just keep buying more. And it gets cheaper and cheaper. We saw that with gold, right? DJ can tell you, we had a lot of people get involved in gold when gold was pushing below 1680, 1675. It looked horrible. But hey, we had our target allocations. I'm still in my gold stocks, right? And I'm not worried about gold now, but it looked ugly. And I kept telling people, protect yourself, don't get too big too fast. What if gold goes to 1600? It's possible. You have to protect yourself. The only way you can is by sizing properly. All right, so that's the question. That's the answer about ADA. I hope that answers your question. But I'd be looking for those support levels, okay? And of course, you're probably gonna need Bitcoin to cooperate with you. Now, I have Benil. I am a day trader, and I think it will go and try to reclaim 60K level. Well, hey, look, as a day trader, you're talking about Bitcoin. Look, this is not a bad place for day trades, but the thing is, you can't judge it on a daily chart for day trades. You'd have to go to a smaller time frame. Your levels are going to be different on a smaller time frame, but your profit targets are also going to be different. If you're day trading and you're buying this thing now and you think you're going to make 5,000 points pretty easily, that's not a day trade. Okay, that's out of proportion. So, you know, reasonable targets for like day trades, if you could pull 500 points, that's probably like a home run for like a day trade. All right, people that are confusing it, like, oh, I made 3,000 points for a day trade. That's not a day trade. All right, it's a swing trade. You're on the swing trade time frame or proportion. Don't mix them. It's a bad idea. All right, especially when you're it's the magnitude of risk that you're up against that you may not realize. All right, when you have a day trade stop, but then you're trying to play a swing trade time frame, you're most likely going to get stopped out a lot in that situation. So anyway, all right, so good question there. Would you say that RSI is between two extremes, overbought and oversold? Okay, I don't follow RSI, GSEN. That's just a redundant oscillator. Like many of these other ones, they don't really give any valuable information, at least not on the day trade time frame, not on the swing trade time frame. They can be confusing. Again, an oscillator is really just a formula, a math formula that smooths price, right? I mean, if you look up how the RSI is, how it produces the number that it produces, it's comparing a previous high to the current high, or a previous low to a current low. And it basically, it's just kind of plotting the difference on a graph. And it's old information. It's not going to help you anticipate where the market's going next. I know a lot of people like their RSI, but that's why a lot of people don't make any money. So thank you for asking about that. Let's see, VP, Clove. All right, what's Clove? Is that a stock? Let's see. Okay, Clover Health looks like a stock. All right, interesting. I like this price action here. So look at the recent price action. Bearish, right? This is pretty bearish activity over here. And then it found itself a support. That's interesting. And this support, now talk about structure. This is nice example of structure, because look, we're on a daily time frame here. And this thing put in a low at $6, what is it, $6.31 back in March, what is that, March 5th? All right, and today is almost April, what, April 19 or whatever, and it touched that low area 2 times since. That's structure. That is a nice support. Okay, now, thing is, right now we're fooling around much higher. So what do you do with this now? Well, you broke out of the range. So if you're in this is great. Hopefully you lock in some profit here, because that's a bearish pin bar developing. So this is the reward that you get for taking the risk at the support. Not here. I wouldn't buy this thing now. On this is, now if you bought the breakout and you're looking for this thing to go at this point, I mean, you can try to give it a chance, right? Because if you're in from a good price, but if it takes out this low of basically 9.15 area, or the $9 area, you can always give it to the whole number, then it's probably going to pull back to inside of the range. I mean, that's what I would think with a sell signal showing up after such a breakout, okay? So I don't like the way the candle looks. I mean, this thing is closed now. I don't like that candle, but I do like the structure previously. So, you know, to get involved in something like this, you could look at the middle of the range. Now, you know, many that watch my analysis, they know that I'm usually against getting into something in the middle of the range. But there is an exception, and that is when you have the range breakout and then it revisits the middle of the range. That's a different story, because now that middle of the range is going to have a lot more supportive features. Because remember, this is all a game of psychology, right? And a lot of people that are short from the middle or short from a higher price, they're going to be looking to cover there. And then you're going to have a lot of people who want to step in there after the breakout. After the breakout means, you know, it's going to inspire more confidence. I would be much more confident buying in the middle of a range after an attempted breakout and failure, as long as that middle is showing me some kind of support. So anyway, something to keep in mind there. Also, if you look at something like this on a market profile, from a market profile perspective, you'll find that in the middle of the range, there's a lot of volume. Okay, so that means there's a lot of volume on market profile, because it basically shows you volume over time. That means if there's a lot of open interest there, a lot of contracts open there, or stock or shares open there, that means there's likely to be a lot of activity. In this case, after the pullback, I'd be looking for support. So anyway, just want to throw a little market profile in there. All right, so that's Clove. Let me jump back here to the other one. I saw an interesting question that I didn't answer. Hold on, let me see if I can go back to it. And then I'll go back to the other question here. Hold on, there was a question here about, where was it? All right, I'll just go back to it. All right, so here's another one. MZ, do you still recommend Henry's SOXL options based on today's retrace? Now, all right, that's a very good question, MZ. Let's take a look at that. SOXL, that's the, this thing is basically the S&P 500, or I'm sorry, not the S&P 500, the semiconductors, right? It's an ETF based on the semiconductor index. Now, I don't agree with the position to begin with. All right, now look, they were all optimistic here, buying into a resistance. It's just not something I would do. So they were looking at the earnings coming out the rest of this week, because they're very optimistic about the earnings. I don't pay any attention to that stuff because I know a lot of it's random and markets are irrational, so it means nothing to me. I don't use logic. So you have to understand something. I would not buy the SOXL on this pullback. The reason is you're coming off of a range high, and this is going to follow the Nasdaq, right? So the Nasdaq, as you saw earlier, is in a horrible position, or I shouldn't say horrible, but I should say a high risk position, or a vulnerable position, an area that's vulnerable to selling, right? NSX. I mean, look at this. This thing hasn't even started yet. And we see 123 point pullback today. This hasn't even started yet. So I would be more interested in like an SOXL around 13.2. That's where I'd be interested because that's where the support is. I don't buy resistances. So to answer your question, and again, nothing against Henry and whatever people calling for longs, that's just their perspective and their opinion, and that's cool. But I have mine, and I don't switch. Okay, I have my opinion. The market tells me what to think. I think it. I try it. If I'm wrong, I take a loss, right? So I have my risk is defined, and like with my SQQQ, my risk is defined. I can't. Here's an interesting lesson that you may get something out of. When I thought about shorting, right up in here with the and this relates to the SOXL. When I thought about shorting this up in here, I was thinking about how to short this, right? Like I was thinking, should I short shares outright? Should I use options? And I thought about it and I thought about it. I'm like, you know what? Options are a better idea because if I'm wrong and the market just relentlessly goes higher, I can't get stuck in hope mode because even if I do, my risk is limited by the option. Okay, so the max risk was what, $250 or whatever for the SQQQ, and I bought them, and that's it, right? So if I'm wrong, hey, I can get out and take a loss, right? I don't have to take the max loss, but those were January calls, so I have a lot of time for the market to prove me wrong. Anyway, my point is, if I shorted the shares outright, there's a chance that I get caught, and then I go into hope mode, and now I take a much bigger loss, right? With the options, I'm protected from that. So anyway, it protects you from yourself. Anyway, so good question on the SOXL. To answer your question, no, I wouldn't take them. All right, let me jump over to the other chat here. Hold on, let me just catch up where I am. Oh, wait, Gabriel, let me just jump over this one. Reducing risk when we are too long, isn't that admitting that shorting could be a good idea? No. And here's why. Just because let me see how I can answer this. Just because the risk is high on the long side doesn't mean that the risk is better on the short side. I mean, it could be, but again, we're going counter trend, right? Counter trend on the short side is still high risk because buyers are looking to step in at any point. Remember, markets are highly random. It's not binary, like one or the other. So there are points in the market, like for example, this area right here, okay? That area. Between basically this boundary, between this and like this is a bad area for longs and shorts. Why? Because it could find a top or it can keep going, right? So it's very risky on both sides. If I'm going to take a short, I want to see something extreme and then fail because that means I know there are a lot of people that are probably caught on that long side because they consume all that optimistic nonsense that's pumped on, or pushed onto people. Right, so that's the thought process behind that. So I hope that answers your question. All right, Pal, haven't heard you talk about oil. Okay, let's take a look at oil. I haven't really been active in oil. Haven't been looking at it. Now this is interesting. Oil has been obviously a strong market for a while, and I thought for a while it was kind of helping the S&P along because the S&P is has a heavy energy sector or weighting, right? And oil is still holding strong. So what do you do here? Well, oil is in that area like I just described the Nasdaq. Wouldn't short this here, wouldn't buy this here. I would wait for oil to pull back to this range right here, right? Which is what, 39.76 area? This thing right now is at 63. Is that right? Hold on, low. I'm sorry, I can't read. 59, the 59 area. So 60 area is where I'd be looking for the pullback if you're going to do anything with oil. Otherwise, I'd leave it alone because your levels with oil, it's either a short up here, at least a try, which is counter trend and much riskier because it could go for the higher high and keep going, right? Or it pulls back, which is the higher probability thing, pulls back to the support, you look for the reversal and you buy it, right? That's what I would do with oil. So I would leave it alone here, let it pull back, let it prove that support again, and that's your opportunity. Especially with this in the light of this trend. What a nice trend. So just something to keep in mind there. Thank you for asking that. Let me jump back here. H-bar, USDT. H-bar. That's a weird name for a coin, but hey, what do I know? All right, so here's H-bar. Look at this triple top, right? Now, again, that's a great example of not getting caught in a breakout. Look, you're near the range low. So this is a nice general structure. I like this for swing trades. I like this situation because the general trend is bullish, as with most of these, right? They have that situation in there. And now you're testing the range low. So attractive location. Definitely like that. In fact, you know what? If I had seen this earlier, I would have put this on the watch list as well. This is a good candidate. Also, I like this thing's what, 28, 30 cents? This thing's at 30 cents right now. So it's on the cheaper side. It's on the less expensive side. But this thing can move. It's proven that it can move, right? What's the low here? 29 cents. What's the high here? 41 cents. You're looking at like a 10-cent range. So in this situation, you have the inside bar developing, right, with the tail on it. That's cool, and you're at the range low. So again, if you're looking for the swing trade, you got to watch Bitcoin. If Bitcoin breaks or Ethereum breaks their supports, these things will probably break. In that scenario, you have to take the loss, okay? If you're looking for an investment, well, this is a great price to take a small bite. But if it breaks, then that's where you have to be careful on how you add, right? And the next add, you can think about something like an add somewhere here in the middle, right? In the middle of this area, what is that? Around 22 cents, something like that. And then back to this old resistance, which should act as a support. Those are really your add places if you get that bigger break. Keep in mind, if we go into that pronounced winter, whatever you want to call that, where these things just go into they become unpopular for a while, they're probably going to just go into these consolidations and not break out for a while. So don't get too hyped up on hope is all I'm saying. So just treat them like very business-like. They break the support, you're probably better off taking the loss and waiting for stability to return. But right here, that is a form of stability, so it's worth a try, at least for a swing trade. So thank you for bringing that one up. I definitely like this formation. Okay, Doggy. All right, let's take a look at Doggy. D-O-G-E, or whatever you call that coin. Now, this thing is just ridiculous, right? A total hype coin. Look at this consolidation breakout. And this is why I see a lot of gurus. They were sharing trades. They're always talking about trades like this. And they're like, look at the results. I bought it here and look where it is, right? Okay, great. But they don't all work out like that, as we know. So in this situation, it's going for the next leg higher, right? If you're in this, great. At this point, hopefully you've locked in some profit and you let this thing ride because you have a resistance right here, right? Which is proven at, what is this? 44 cents, right? Around there. This leg is trying to break through that, right? Where it is right now. This is a sign of strength in light of where Bitcoin is. So you have that going for you. So I would give that I would give that a chance, right? If you get another pin bar or some kind of bearish candle develop in this area right here, that's probably a good time to reduce your risk further. If this thing pulls back, you're looking at this area right here, which would be, if it consolidates, you're looking at around 24 cents. So that would be the next area to be looking for support. Again, this thing is heavily hyped. You have to be careful with this. That's why you're better off reducing your risk as this thing starts to push. Just lock something in. When I say that, like if you have, let's just say you have 100 coins, okay? Just take, 20% off the table or 10%. Just take something off the table so you have it locked in, and then you let it ride and see what it does. As it pushes higher, and if it starts pushing like whole numbers, not a bad idea to just let some more go. In fact, it's not a bad idea to put some limit orders out at some ridiculous prices. What's a ridiculous price? 50 cents? What is this thing at? What was the high here? 44 cents. So you put a limit order out at 50 cents, maybe another one at 60 cents, and maybe this thing, for whatever reason, touches those numbers and takes you out. People always want to get the high. They want to maximize whatever, but that's gambling. The only way you even have a chance of doing something like that is by putting a limit order in advance. And there's no way to know if that's going to be the top. Okay, but the point is, at least you're getting some ridiculously high prices if you put some limit orders out there to lock in profits. Other than that, you can just trail this thing 2 candles back and see where it goes. Again, if you get a big bearish red candle over the next candle, you should probably reduce your risk further. But the time frame of your trade is also going to have a lot to do with that. Is it a swing trade? Is it a position trade? If you're not in it at all, don't chase it. Wait for a pullback to 24 cents. Okay, so thank you for asking about that. All right, so let me go back. Let's see what else I have here. Hold on. This seems like one of the few channels to get true value. I appreciate that. Thank you. Thank you for saying that. There's a lot of streams out there, and there's all kinds of stuff going on, and I don't get many views, relatively speaking, but maybe it's because I speak of reality, and people don't want reality. All right, so, okay, I'm just going through it. So I went through that one. Whale waiting to revisit. Okay. All right, so let me see it. Now I had some questions here from people that were, hold on, just like me. I don't care about news or what people say, just charts. Oh, thank you. Appreciate that, Benil. Okay, cool. Now wait, I had a couple of questions from these people giving me some coins here. I want to make sure I get to those because I appreciate that. So Vet, let me just jump over to Vet real quick. Okay. Hey HS, you always ask me about this one. Okay, let's take a look at Vet. So Vet has been this thing just keeps going, right? This doesn't know how to pull back, and that's fine. If you're not in it, don't chase it. If you're in this is what I'm talking about. Like for example, with the one we just looked at with Dodgy Coin, whatever you call that thing. If you see a candle like this develop, like you see right now, that's not a sign of continuing momentum. So that's where you want to reduce your risk or take more off the table and see if it pulls back. Now, if you're not in V-chain, like I say, stay away from this. You don't want to buy the highs. Look at the candle before it. Look at the range. What's the low? 16 cents, around 16.90, around there. That's pretty dramatic, right? So if these things get more dramatic, if something comes in and knocks the wind out of them, you're going to see these things pull back, a good 30 or 40%, and that's healthy. That's normal. It's not even a bear market. So I would wait for something like that if you're not in it and you want to get into some. Again, this one is probably a better candidate for a position trade. So like I said earlier, go to the weekly chart. Look at this. If the daily chart looked like this, would you buy this? I wouldn't. It's vertical. So wait for a better price. Don't buy the high. That's how I would treat something like this. And the real key to, especially the bigger picture, because look, all these coins, I know many of you feel like you've missed the boat. And look, I feel that way too. They had some ridiculous moves that no one saw coming. Some people got into some of it, great, and now they're millionaires, whatever. Okay, that's great for them. But the thing is, if you don't take that money off the table, if you don't take something, and this thing gives it all back, as we know, that's a repetitive process in the market, right? These things pull back, and that's where people run into trouble. So my point is this. If this market, if the altcoins give us an opportunity, right, and these things get cut in half, you see them, pulling back 50% or more, that's the time to really put some money to work. But even then, you want to be careful because there's no guarantee that they're going to turn, right? Right now, it looks great because like, oh, pull back. I would love to buy this thing at 50% lower, right? But if there's a problem with the whole space, they can go all the way back to the bottom. All right, we saw that the first time around from 2017, 2018 to 2020 summer 2020 lows when none of these gurus and none of these experts were making videos on these altcoins like we see now. Okay, and I remember looking at some of these coins like Theta and Tron, and they were like complete garbage. Even Neo, look at Neo, right? Neo USD. Look at this thing. This is ridiculous. Okay, this is the herd mentality. So that's the weekly, right? So again, this kind of move, I remember looking at this coin, struggling at like $10, struggling. I'm like, this thing sucks. This thing, if Bitcoin pulls back, this thing's going to zero. Well, boy, I was wrong on that one. This thing's made a high of over 110. It's ridiculous. My point is, just leave these alone and let them pull back to where people are hating them. That's often where the opportunity comes back, okay? And some of them will do it, some of them won't. But just remember, we saw this kind of stuff with the dot-coms 20 years ago, and a lot of those dot-coms you don't hear about today. And people say, but it's different this time. It's not different. It's the same thing. Not all these coins are going to be relevant in the future. It's just the way it is. All right, so let me jump over here. Let me see what else I got. So that was VeChain. Okay, cool. So what I mean by this, I'm referring to BT. Okay, Mana USDT. MANA USDT. Okay. All right, so now look at this, very interesting. So nice, look, all these have a similar trend. This one tried to break out. Now this is a situation where maybe you bought the breakout and it ran a bit. Okay, cool. It's a good idea to take some money off the table when it runs a bit, because now if it gets caught in this, now you may get stuck in hope mode, right? If you're in hope mode, well, you're at least near a support at around what, 1831, around there. Old resistance often becomes new support. Just like Bitcoin, though, there's no stability just yet. So, you know, I don't know if you're in this or not, but if you're not in this, this is not a bad area to consider, right? But again, this is, you know, it's an inexpensive coin, so swing trades are going to be a little tougher. I'd prefer in this situation to see a more of an extreme move, and that would be toward the middle of the range. Okay, let's take a look at this on the weekly chart. I mean, look at this. So imagine if you bought it up in this weekly tail. Imagine that, right? That sucks if you bought it up there. So I would wait for the middle of the range, or even more attractive, the range low. Remember, with these coins, whether it's a coin, whether it's a stock, whatever it is, you want to anticipate your levels in advance. You want to have your levels on your charts and say, okay, look, here's the range low. That's where I want to buy it, okay? Now, the market may deliver that, or it may not. You don't adjust and say, well, you know, screw that. I just want to get in now. You let the market come to you. You don't chase the market, right? I don't fish, but it's kind of like fishing, right? You don't sit there and chase the fish. You get in your little boat and you put your thing out and the line out in the water and you wait for them to come to you, right? So it's the same idea. It's very similar to that. So you put your levels, and again, just respect the randomness. It can blow through the level randomly. So you wait for some sort of confirmation, right? And that confirmation in this, especially on a weekly chart, can take a couple of weeks, right? So just something to keep in mind. That's the kind of plan you want to have with these things. Anyway, so that's what I say about that. I don't like the levels right now. I would wait for better prices if you're not in. If you're in, you should probably reduce your risk if you haven't. Okay, so that's Mana USD. All right, let me jump back to the other chat here. How am I doing with time? Okay, not too bad. I'll take a few more questions here, and then I'm gonna have to wrap this up soon. So let me see here. So I got Dodgy. All right, hold on. Let me just go back. Let me go back. All right. So price. All right. Safe Moon is okay. I'm not familiar with Safe Moon. Okay. Let me see. Would you mind explaining how? Oh, there was okay. So the reversal zone. I'm not going to have the time to show that right now, but basically the reversal zone, it's a proportion from a recent high. So I'll get into that another time though. Thank you for asking that question. Let's see, what's up with gold? Okay, Shubham wants to know about gold. Let's take a look at gold because we're long gold, all right? We have a swing trade in gold, and you can see the target zone, right? That blue box right there is a target zone. You can see the trade. So gold, I wouldn't worry about this, Shubham. This is a bearish pin bar. So this is where context, understanding context can help you. So in this situation, now we got this thing at 1720. That was after the double bottom developed at 1675. All right, we sent this is like what, 3 weeks ago we sent out this trade. So we reached target one, which means we only have 2/3 of the position left. Okay, target one was 1780. And this thing was at 1790 earlier today, but we actually reached target one on Friday. So our risk is reduced. I'm not worried about a bearish pin bar on gold. For one, we're going into a fundamentally or seasonally bullish time for gold. That's one thing over the next few months. So you're going to have that working for you. Other than that, you know, we have this inflationary situation developing. So there's a lot of reason for gold to go higher. Now, again, I'm not one to trade on fundamentals, but in this situation, all right, let's just look at it from a technical perspective. We broke this resistance at 1746, right, the 1750 area. A weak market doesn't break resistance levels, okay? It should respect them, and this broke it. Now, it may be pulling back a bit, but I'm just looking for another higher low. I'm not making any adjustments to the gold, all right? I'm just gonna stay in it. I have my gold stocks, okay, wheat and precious metals, which is doing nicely. All right, I have an average price of like $40. I averaged into this during this nasty pullback phase, and it looked ugly, very ugly at times, but I had my target allocation. I filled up my shares, and now I just let this thing do its job, all right? I don't even look at it. Let the market do its job. NEM, another one. We talked about this one. I'll look at these things. They're ahead of gold, so I'm not worried about gold. Thank you for bringing that one up. Let me jump over to the other one here. how far make Una tell me? Okay, I'm not sure what that question is there. Nano. All right, let's take a look. NANO, USDT. I'm guessing. Oh, one of these. All right. So vertical. All right. Again, when you see vertical, this is a successful breakout, right? So you know a lot of these gurus and experts, they'll show you an example that looks like this. And like, oh look, I bought this thing. I bought it right here on this breakout, and look how I doubled my money. All right, great. They don't all work this way. Well, so this is a nice example of a successful breakout. They don't work this way most of the time, but when they do, you have to know to let it ride. Now, this is also why, again, you take profits while you can. You're not going to get this top. What is this top anyway? Let's see. The high there is 1444. This thing is now at 974. So that's why you try to take something along the way while you have the opportunity, because you don't know if this is coming next, or you know it's coming, but you just don't know when and how steep it's going to be, right? When you see this and you happen to own it at a good price, again, I emphasize, this is why you take money off the table while you can. So if you bought this thing at, you know, I don't know, what was the breakout price? Around $7, and it's like at $10 or whatever, $12, you've almost doubled your money, not exactly. Hey, take something off, right? And then at $14, you know, at that point, if you bought it at $7, you're basically at double. Take some more off, right? And then you don't know if it's going to go to 20 or not. I don't care what the YouTube gurus are saying. You don't know. So now you're in this situation. All right, so what do you do now? I don't buy this pullback because there's no stability there. Stability meaning like you're at an attractive price and you're back into the middle of this larger candle range, which is attractive. All right, that's I'd rather buy the middle than the high in this situation, but there's no stability, meaning there's only a single candle there, right? This candle, it's an inside bar. If it takes out that low, it's probably going to go lower. And I'm guessing that, you know, the Bitcoin situation is probably going to put some weight on this thing or have an effect. So I would be careful right now until stability appears, meaning the next couple of days, you want to see another inside bar, maybe a bullish pin bar develop somewhere near these lows around what, the 920 area, perhaps around $9. If it breaks that area, you're looking back at the $7 area. Okay, so I would hold off and wait until some sort of stability appears. A common mistake in these situations is people jump in too early because I don't want to miss it. I'm just going to jump in because, you know, it's going to go without me. Well, that may happen, but it's the risk. Let's just think about this from a risk perspective. If you buy this thing right now, and this thing goes to $7, all right, you're going to be like, oh man, I could have waited. I could have gotten a better price. Let the market prove itself, right? Also, if you buy this thing, you're risking $2, right? If you buy it now, what's this thing right now? $9.79. So let's just say it goes to $7. You're risking, what, $2.50, almost $3, let's say. How hard is this, or what does this thing have to do for you to make $3? Well, if it takes out this candle high, which is basically 11.5, that's only about $2. So it's going to have to go back to its highs for you to justify the risk, okay? Which it's possible, but it's right now the momentum doesn't favor that right now at this moment. That's why you're better off waiting for something to show up that confirms. When you wait for confirmation, you're not going to get the best price. So forget precision, forget perfection. Markets are messy. You have to be okay with getting near the bottom or near the top, right? You're not going to get the bottom or the top. So if you have struggle with that, just recognize your risk and be like, okay, this is a general area where the reward risk makes sense, and this is the potential target area. In these situations, right, if you do buy near the low, I usually don't put targets near the high because it's harder to get up there because a lot of people are going to be selling before you. So you look at somewhere where a potential lower high can develop, right? That's a lot of times I like to put a price there. There's nothing that says to put your exit here, your profit target here. There's nothing on the chart that says that. You just have to know where people tend to sell. You know, it's a lot of these things are not going to be obvious. A lot of these things are not something you can just see and be like, oh yeah, that was easy. All right, so good question here. Let me jump back and forth. So that was Nano. All right, ADA, I went over that. If you want to watch, the thing is just when I finish this video, you can go back and watch the ADA part. I went over ADA. All right, so how far? Yeah, okay, yeah, I don't know what that, J-Manel, yeah, I said the same thing. Okay. That is why you start accumulating around 10 to 20K or even lower. If you're referring to Bitcoin, yeah, I mean, those would be great prices if it wants to provide that opportunity. We just don't know. And that's where it gets me with these experts who like someone asked me in this stream a week ago, someone said that some expert came out and said, we're beginning a 20-year bull market in Bitcoin compared to the Nasdaq. I still remember that question. And I started to get upset about it because it's like, where was this expert back at the July lows, right? July of 2020. Why are they coming out now and saying that we're at the beginning of a bull market now? It's Bitcoin 60K now? So, and the point is this too. A bull market, you could still see a 50% retrace and still be in a bull market. My question is, would this guy come out and say, oh yeah, we're still in a bull market after this thing is at 20K? That's why you can't listen to people. Really, you can't listen to people. Because the thing is, when you come out and say, oh yeah, it's the beginning of a 20-year bull market, it doesn't imply risk. It implies that Bitcoin is just going to keep going up without a problem, okay? And no one sees this coming of this little pullback. No one a week ago was saying, oh yeah, it'll be at 50K in a week. No one that I was looking at was saying it. And the only thing I was saying was 60K is too risky for me. That's all I was saying, because I don't know if it's going to go to 50K. The market has to tell me. I don't have opinions, especially absolute ones. Okay, so thanks for mentioning that. Okay, do you have any idea on the account lose during, I'm not sure, I don't understand that question. On the account lose? I'm not sure what that means. Okay, Doc. Okay, I answered that question, VeChain, got it. Okay, Go EV. All right, so Go EV, electric vehicle, right? Electric vehicle area. These things have been hated. And this is, I'm interested in sectors that are hated because that's where usually opportunity lurks. Now, it's not obvious though. So look, here's a nice thing. You have a double bottom developing right there. The trend is against you here, right? I see nothing but lower highs. And you're fighting with this lower high right there. So you have, that's $10.37. So there's two ways to go about this. You can take the chance now. I mean, if you're buying this thing, your risk is obviously going to be the lowest here where you are right now. If it breaks lower, because the Nasdaq starts to feel some pain, these relatively weak EV stocks, they're going to get hammered. Okay, they've been getting hammered. Like look at Nikola, right? This is one I've been following. Look at this thing, right? Complete garbage. Look at another one, FUV. I mean, look at this, right? This one got stopped out, and it's a good thing. Let me see what some of these other ones. There's a couple other ones in there. NIO, N-I-O, right? Take a look at this. Well, actually, NIO is holding up well too. Look at that. Nice double bottom situation. So my point is, or actually triple bottom. My point is with these, you want to find these type of opportunities. Your risk is low here. Great location, right? Even NIO is actually a buy signal right there. Okay, that's actually a buy signal. It's a little ahead of itself, but not a bad area. Your risk is defined by $34, right? If it takes out $34, that's a good time to take your loss. But going back to your Go EV, right? Similar situation, hasn't really gone yet. You just have to be careful of the general market, because if these things are acting relatively weak, remember, the market's been pushing all-time highs, right? The S&P and Nasdaq, they've been pushing all-time highs, and everyone's been throwing a party. These stocks weren't even in the middle of their range, which means they're acting relatively weak. So if there's a major pullback in the market, which we have not seen, right? This today was nothing in the Nasdaq. That was just like a joke. A serious pullback in the Nasdaq is 1,000 points, and I don't think we'll see that in one day. But if the Nasdaq pulls back 1,000 points, these things are probably going to feel some pain, even though they're in a great location because of the relative weak structure. So I would hold off on them, or if you want to start, take a small bite, or maybe even buy a long-term option, buy 8 months of time on something like this, so you could weather the pain if these things are going to, fool around a bit. But the key thing you want to watch for on these, because again, I would have put this on the watch list as well. If the Nasdaq does get hammered, and you see the Nasdaq at 13,200 or lower, and this thing is still fooling around at these prices, then it's a long. Because when that Nasdaq recovers, a lot of the stocks will feel it, right? And that's when I'd be expecting the relative strength to kick in, and that broader trend to change. That's probably the better time to do it. So that's one scenario. The other scenario is you wait until this lower high is taken out at 10.18 or 10.25. Because remember, weak stocks don't take out resistance levels. So when this thing breaks that resistance, that's a sign. Now going back here, it broke a resistance and then it gave it back. Okay, so I mean, that's always a possibility. But usually when you start breaking resistances, that's usually a sign of a change. So that's more conservative. You have to wait a lot longer and you're not going to get such a great price. But those are two ways to look at it. So that's Go EV. Thank you for asking about that one. Anyway, so I generally like it. Okay, so let me jump back to the other one here. Let me see. Rebecca, wheat, W-E-T. I'm guessing that's a coin. Is that a coin? Or is that like wheat as in like the wheat that we eat? Or is it this one? Oh, the wheat fund. Is that the wheat fund? You're trading wheat? All right, so something like this serves as like an economic gauge, you know, to be honest with you, because these things are going to be very sensitive to the dollar, right? Commodities usually are. Here's a situation where this is a high risk area. I wouldn't go near this thing at these prices, right? You're near the range high. So if you're going to get involved in something like this, now if you're in it, great, take something off the table because you're getting into this resistance range. It doesn't mean it's going to turn right here where I have this square. It doesn't mean it's going to turn there. But the thing is, the general area is risky. So the lower risk area would be this area right here. Okay, off of this low, which is what, $6.03, something like that. So that would be one area to consider if you want to get involved in something like this. Otherwise, you're looking at a potential double bottom if it can pull back that far. Remember, this thing's going to be affected by the dollar. DXY, look at the DXY. Oh, this thing got hammered today. Okay, weaker dollar, interesting. Weaker dollar, and the stock market felt some pain today. The dollar broke this. I'm bringing this up because, you know, you mentioned something like wheat. That right there says that the bigger picture trend, which is bearish, is still in play, right? And that's the inflation scenario. Weaker dollar. Let me check the bonds. US 10. Ah, okay. Well, this thing hardly moved, right? So the bonds were working their way higher. The bonds took out this resistance here, which means yields were actually going lower, and now we get this little hesitation here. Very mixed market, very mixed economic situation right now. Again, this is why I don't have any opinions. But all right, so going back to wheat, yeah, that's how I would handle wheat. A lot of times you're better off just like watching the levels and then comparing that to the bigger picture instead of trying to wrap your head around all this complexity, like, oh, economic this, and the SEC said that, and the FOMC said this, and how do you make sense of it all? Just look at the levels. A lot of times, the smart money knows stuff that we don't know, and you can follow their footprints in the price action, okay? Especially on on instruments that are affected by economic information, like wheat. Okay, so thanks for mentioning that. Yeah, listening to the Moon Boys. Yeah, there's a lot of those, Mel. What do you think of MTLS? Okay, MTLS, let's take a look. Okay, range trade, materialize is what it's called. All right, so range low. I like the location. I don't like this. That's not good right there, okay, because you're up against that, you're fighting that, and you have these lower highs that have been established. In this situation, I'd be expecting a lower low. So if you want to get involved in something like this, let this thing push the low and let it prove that it doesn't want to go much lower, right? Go for the failed low and see if it holds. Otherwise, buying this, especially stepping in front of this thing, high risk thing to do. I don't like it, especially in light of where the S&P and Nasdaq is. I mean, look at the S&P, right? S&P, look at this thing. Hasn't even begun to pull back. This is a blip. This is nothing. All right, look how much room it has. People don't pay attention to relative strength, but that's how I was originally trained. It was one of the first things I learned, you know, when I got involved in this more than 20 years ago. I learned about relative strength. I mean, look at this thing. This is ridiculous, right? So places to start buying stocks really relative to the S&P is here. That's a long way to go, right? That's 39.83. So right now we're at 41.65. That's a long way to go. And that's just, if it pulls back to that, again, which is not something that can occur in one day, that can take 2 or 3 months at the rate that this thing's moving. I mean, look from the breakout. When was this thing? This thing broke out on around March 15th. No, the high was established around March 15th, and it broke out, what, on March 29th? And look, we're like in the middle of April. So something to keep in mind there. All right, so let me jump back to this other chat here real quick. I'm going to have to wrap this up here momentarily. Let me see. Yeah, I'm talking too much. All right, but I appreciate all your questions. Okay, I went over VeChain, GoEV, went over that. Okay, PI. Oh, so this is an interesting one. Someone had brought this up a couple of weeks ago, and maybe it was you, but someone had brought this up, and someone had mentioned that the PI oscillator or whatever predicted Bitcoin tops over the previous 3 or 4 tops. Look, here's the thing. I'm not going to pull it up here, but I can tell you if it's an oscillator, first of all, if it occurred like a couple of times a few years ago, it's probably because no one was looking at it. First of all, I watched a guru mention, he had the PI thing on his chart, and he talked about it. All right, you know what? If there's a YouTube guru talking about it, it offers no value. If everyone is watching that thing and everyone's seeing the same thing, I wouldn't pay any attention to it, because often when everyone's in on the same information, the information has no value. So I'm not familiar with that oscillator in particular, but it's an oscillator, and that means it's probably backward looking. I'm not interested in backward looking tools. I don't care what it predicted 5 years ago or 10 years ago. The market was a different situation back then, and probably most people especially that are involved now, had never heard of it, and that's usually when there's more value. Okay, so thank you for bringing that one up. I will take a look at that so I can give you a better answer next time, because I haven't actually evaluated the oscillator myself. So thanks for bringing that one up. Okay, let me see. Is a sign of a top. I mean, the PI is a sign of a top for the year. Well, right, it could be, but I don't go by that. Like, I would not let that solidify an opinion for me on something like Bitcoin. The levels and the price action does that for me. Oscillators are behind. Okay, I was calling for the high risk area for weeks. I was a little early, but you know how many people were optimistic and going nuts over here on this breakout? A lot of people. Okay, we even called the swing trade an aggressive swing trade there, which wasn't my call. All right, I don't take those kind of trades, but you can see why. It's not my style, because I don't like this kind of risk. So now, it went to a target or two, but then you have to get out and whatever, take the loss or break even on the rest of it. But, it's not a bad trade, but I mean, not my style. All right, so my point is, I don't need any kind of oscillator to tell me that we're at a high risk area. And like I said, they're backward looking. So by the time it shows up on the oscillator, the information is usually the market's making its move. It's not going to help you anticipate the move. All right. Okay, what do you think? Okay, so I went over Doji. I went over that. Yeah, okay, so you just have to go back. When I stop the stream, you'll be able to watch the stream from the beginning, and you could skip through and find it. All right, let me go back to the other chat here. All right, let me see what I have. Wow, I think I got most of the questions answered here. Is that right? All right. Oh, no, I have a lot more. All right, APPH. Let me see if I could do it. APPH. Let me put it on here. APPH. Is that a stock? App Harvest. Oh, man, what a mess. I wouldn't go near it. All right, so here's why. Bearish trend. That's clearly a bearish trend. All right, breaking the lows. So we have a lower low, which means that bearish trend is still intact. This is a great example of, like, some of those, like the EV stock we looked at, and a couple of the other stock that we looked at that looked similar, where it was fooling around a possible double bottom. If the previous structure looks like this, chances are it's going to break the low, right? So you don't want to get caught in that. Let this thing find stability. I would stay away from it. Wouldn't buy this thing here. Okay, there's no reason to. Wait for at least a resistance to get taken out. 1785, 18, like this area right here. Let the price get through that first and prove itself, because this thing right now is not looking good. Okay, it doesn't mean it won't turn, but it's very risky, and you don't know where that bottom will develop. Let it develop the bottom first. Okay, let the market show its hand, basically. All right, so thanks for bringing that one up. Let me see if I could jump through some other ones here. Can you please look at Link? Kavi wants to see Link. All right, so Link had that big breakout the other day, right? Let me see, Link USD. And I know we got stopped out of this piece of garbage, right? Our trade went to target 1, stopped us out, and then it went berserk, right, on that news because they came out with a white paper or something like that. And now look at it. This is, again, why you don't chase these things. So levels. Now the trend is still bullish, right? I can't argue with the trend. You have an old resistance, new support at here, 32.88. This thing right now is at 37.32. Is that right? It went as low as 32.88. No, low is 31.30. Yeah, so it was around that area here. Let me see. The low 32.65. Yeah. So you're looking at this area here. It tested the area and it's trying to come off of it. Similar to the Bitcoin situation. Now, if you're not in this, this is tough because this momentum is not finished yet, right? It may, if Bitcoin starts to break, this thing's going to break support. So if anything, wait for those lower 30s to be tested again and wait for stability. At least there is a potential support there. If those lower 30s are cleared, if that is cleared and you're in it, it's a good idea to take the loss unless you want to hold it to 24, right? Because that's where the next support is. It may find support in the middle of the range. It's possible. But remember, this thing is going to be a function of Bitcoin now, right? Because look, Bitcoin pulled back, this thing pulled back. It's obviously following. So those are the levels I'd be waiting for. If you're in it from a good price, right? And you're not sure if you should be taking profit or something now, definitely take something off the table because it's very risky. There's no guarantee that this thing's going to find support here and then start pushing higher highs. Especially if Bitcoin, if the party's over in that thing temporarily, right? So just something to keep in mind there. That's how you have to measure your risk. So thanks for asking about that. Okay, Anna, Uni, all right? Okay, sure, let me do those real quick. So Uni, USD. So Uni, look, talk about a slow mover, right? I mean, I sent out, Uni, 2 months ago or something? You could see the trade there. I mean, that just took forever. And I think it went to all 3 targets, right? Did it go to all 3 targets? No, it went to 2 targets, right? And the third target's at 42. This thing went to 39.53, right? 43 was the third target, never got there. So look, and it's right back in the middle of the range. So not a bad place to be buying some more if you're willing to take the chance, but the risk is defined by the range low. And look, it even tested the range low. So that's, if it breaks that range low, and I would assume that Bitcoin is doing something similar in that situation, that's where you're going to have to take the loss, right? If it can hold that, then I'm expecting more consolidation. Again, this is going to be a function of Bitcoin, but you are at a potential support level right now, and you can define your risk by that range low, which is around $27, $26, that area right there. This thing is fooling around $32 right now, so you're looking at around $6. This is, you know, if you're not in this thing, I mean, if you're willing to take that risk, but look at these highs, right? $39. You have to buy this thing at $32.59 and hopefully make $7, hopefully, or risk $6. The reward risk is in your favor still, but barely. And with the rate, at the rate that this thing moves, it's not for me. It's too slow. Okay, so there are better charts out there. So thank you for bringing that one up. But those are the levels, and the trend is still bullish at this point. So the potential of a higher high is possible. You're just gonna have to wait a while, probably through a lot of random noise. Okay, and Disney. Let's take a look real quick. All right, and I'm gonna try to answer a couple more questions, and then I'm gonna wrap this up. So we all know this company. Obviously, it's a market leader. And look at this thing. So general trend following the market. I would call this a market stock because it should generally respond or look similar to the broader market, which it does. You know, S&P has been making new highs recently. This thing has been hesitating a bit, but I see higher lows and higher highs all over the place, right? We have a higher low over here. We have a higher low over here. And we even have a higher low recently right there. All right, so in a situation like this, again, you're dealing with market risk here. If that Nasdaq and S&P pull back, this thing is going to break the supports. So that's the risk you're facing. It's not just these levels alone. I mean, the levels alone, you're looking at 185 low. This thing's right now at 187. It's not worth the risk in terms of the market position. I'd rather see something like this pull back to like an attractive price, like something back here, 160s, something like that. And I'd want to see the market give me something similar, right? So I'd be watching for the support breaks on something like this. If you're an investor, hey, you know, you lock something in if you have some, and then you just sit in your core position and hope for the best, or maybe you buy some puts to protect yourself. But I wouldn't do much with this. okay? Especially because it's going to be a market-sensitive, very market-sensitive stock. So thanks for bringing that one up, Anna. OKL, QuantumScape. All right, so we've looked at this one many times. And this is, again, electric vehicle situation, right? Breaking those supports. This is what I'm warning about with like the Nikola and some of those other Go EV, which are testing supports. This is what is likely to happen to them if that S&P breaks and the Nasdaq breaks, and they haven't even begun to broke yet. I don't like it. I wouldn't touch this thing. Okay, you're fighting a lower high. It's making the lower low bearish. So it needs to find, if it's going to be strong at some point or turn, it needs to prove itself. Look at the candle close, right? I mean, that thing closed at 31.62. It's minus 10, almost just over 10%. No way. And there's no stability there. So I would leave that alone. Okay, I wouldn't get involved in that. All right, so let me just jump around here. PI was so close to being invalidated pre-coin listing, but they goosed it up and made it look valid. Coincidence or calculated? Coin CEO sold 170 million in stock the day it was listed. Inside money, smart money. I mean, seriously, why would he do that? So that's interesting. Okay, cool. So yeah, that situation with coin. Let's take a look at coin real quick. There's nothing you can't. This is a stock that's perfect for day trading because it's all over the place. I mean, today's range 341 high, 326 low. That's a decent range. There's no price history here. There's nothing to go by. But man, I wouldn't want to get caught in this thing if this thing goes to like 300 or 250 or 200 or whatever, because it can do it, right? I know they make a lot of money. I've watched some videos about their income statement and all that stuff, and but I would not hold on to this thing, not at these prices. Okay, anyway, so thanks for mentioning that. Okay, Dogecoin, can you please? Yep, I looked at it. So let's see. Do you use leverage? What max leverage? Okay, here's a good question about leverage for swing trading. Do you use leverage? Not for the coins. So no leverage on Bitcoin, no leverage on the altcoins. That means we don't short them. Okay, that's one of the prime reasons why. Let me pull up a better looking stock here. So, well, we'll just have Bitcoin up here. So no leverage, and that really keeps us out of a lot of trouble. Leverage can be very hurtful. It can also help you if you understand how to use it, but if you're relatively new, meaning you only have a year or two of experience, which is relatively new, a lot of leverage is a bad idea, okay? So we don't use leverage for, like I said, Bitcoin or altcoins. We do use it for Forex, stocks, ETFs, or whatever else we're shorting. Obviously, we have to use leverage. Options, although you don't have to, but that's typically where we'll do it. But it's very careful. So yeah, that's where we do use leverage in those other instruments, okay? And what max leverage do you use when swing trading? Okay, well, it depends on the instrument. But like something like Forex, for example, all right? Forex, pretty much you're forced, at least here in the US, right? You're forced to use 50 to 1. So like something like the pound. I mean, look at the pound. This thing, look at this. This thing's acting like an altcoin. What's going on here? How did we not get into this? We've been very quiet with the Forex side of things because it's been garbage for a while, but wow, nice move in the pound. So anyway, my point is, 50 to 1 because that's the only choice we have. But if you're using anywhere, like some of these platforms give you a choice. So for swing trades, you don't want to use a lot of leverage, maybe 5 to 1, 10 to 1. You don't want to use 200 to 1 or something like that, especially if you're trying to work on a bigger picture, because the proportions of risk on a bigger picture are very big. And usually when you use leverage in those situations, it's very easy to get margined out of your positions. That's why it's you really need to have a very, very good understanding of what you're doing with it and how you're using that leverage, because you have to keep your positions very small. Even though you can afford more, not a good idea usually, okay? Especially something that can really move. So a lot of people use it like for Bitcoin and stuff, and that's why they get margined out. So thanks for asking that question. Okay, let me see how I'm doing with time. I think I'm gonna wrap this up here in just a minute. 1:34, yeah, okay, so I'm gonna wrap this up here. Let me see if I can answer just like one or two more questions, because I really appreciate, I got so many questions here. Talking about Bitcoin, okay. Icx USD is in healthy uptrend. Do you agree? Okay, let's take a look. Icx USD. Let's take a look. All right, so general trend, all right, similar to Bitcoin, right? I mean, general trend is bullish. I agree with that. You're in the range, okay? Consolidation. You're near the range low. So that is all good as far as a potential trade idea. How much is this thing? $2.23. Okay, so not horrible for a swing trade. Good location. There's no price action here. There's no support, right? You have a red candle inside bar developing, right? There's nothing green there, and it's at the range support. So while the location is attractive, you have no price confirmation. So if you're in this, you know, I don't know what to tell you. If you're not in this, I would wait. Like if you're in this from a bad price, you're at support, so you want to try to give it a chance. But if it breaks and keeps going, if it breaks like the low, 206, you're going to have to take a loss somewhere in there, because that's not something that a bullish trend should do. You shouldn't break supports. So that's, you know, that's a good reason to get out. But as far as getting in now, I would wait. Okay, wait for stability. Again, this is probably reacting to Bitcoin, and you are at a range low. But like I suspect, if Bitcoin breaks, Bitcoin clears 50K, a lot of these things are going to break their supports, like the EV sector, and you don't want to get caught in that. G-Mantle, it is awesome that you, thank you so much. Thank you, I appreciate that. Thank you. Okay, so let me see, great rant. Wow, I'm just getting back. Who is everyone? Gotta be whales. The question is, who is everyone? Gotta be whales who want to raise their cost basis because retail is too busy with, well, I mean, we don't know. There's no way to know. I mean, we could sit there and we can speculate on who's doing what and this and that. All we can know is there's a large crowd buying and selling, right? I mean, it's trying to speculate as to who it is. There's no way to know. So I just suspect that when things are going berserk and things are at ridiculous levels, often the smart money is reducing their risk in those situations. Usually, not all the time, but usually. And when things are getting beat up real bad and everyone's hating them and the retailers are getting margined out of stuff, someone's buying that stuff, right? Who? Usually it's the smart money, because first of all, they have the resources to do it, and they can handle the risk. Okay, and they probably know better not to over margin, but not all of them are that smart. Just to let you know. All right, so or a couple more. Let me see what I got here. So all right, I'm going to take a look at 1 inch. All right, I'm going to take a look at 1 inch, and then Nita asks for blink. On DJ, okay, I have to answer DJ's question. And DJ comes to every single stream that I do practically. All right, so 1 inch. Let me get 1 inch on here. So inch. 1 inch is tricky because you have to write the word in first, right? Okay, so 1 inch. Now, I mean, why did they come up with that name? They couldn't have come up with a better name. 1 inch. Now, here's the situation with 1 inch. You are now caught, right? That's a failed breakout, and you have a double top in the failed breakout area. So not good if you bought the breakout and if you're still in it. Now, here's the thing. It's going into the middle of the range. So yes, it's more attractive now for a potential swing trade. How much is this thing? $5? $5 closed at 502. All right, so failed breakout. This is, I'm not too crazy about buying the middle here because it's a failed breakout. It didn't make the higher high. So I would wait for the range low. Okay, for something like this, you have this range low right here, which is around $4, low, like mid to low fours. That would be a higher probability area to be looking for longs for a swing trade, or maybe if it goes slightly lower. Again, probably will be a function of Bitcoin. But this situation here, I don't like the failure because remember, you have a lot of other longs that piled into this thing, and now as they get margined out or they get caught and they get, you know, they lose their patience or whatever, they get scared out, they're going to start banging this thing, and you're going to see the momentum increase, right? That's why I don't like to buy into these particular situations. If I'm interested in buying a middle, I want to see the candle break out like that and then give it back. Okay, so I would hold off on this. Now, I could be wrong. This thing may find stability somewhere in here over the next few days, meaning, you know, it tries to go lower, can't go lower, gives you a green candle, gives you a pin bar. That would be an opportunity or a prompt to consider the long, and your risk will be measured by the 350 area. because that's your range low. Okay, so that's a good place to measure your risk. And your reward potential could be measured by somewhere around this failed high, because a lot of people will probably look to sell there again, which is around 615. Okay, usually that's the repetitive nature of the market. So that's a good way to gauge your initial reward risk. Okay, so thanks for asking about that. That was 1 inch. All right, so 1 inch, and I was gonna. So I got Blink, and then I'm gonna have to answer DJ, and then I'm gonna wrap this up. Okay, so Blink, BLNK. This was a trade of the week, and it actually was doing okay. I think it reached target one, right? 46.39. Right, target one was 44.50. Again, that's why we put those targets in advance to reduce risk while we can, right? That was this over here, and look, it gave it back. So in this situation, I mean, there's really not much to do here. The stop loss is 31.50. This thing's at 33.77. So you either let this thing go to the stop, right? And you have a smaller loss if you got out of some at target one. But again, this thing's right in the middle here, right? It's the middle of this range. You have a range low at 32 around there. It could maybe form a double bottom, but at this point, it can go either way, right? Especially, and what I don't like about this situation is the market, right? So if there's a pronounced sell-off, then I suspect that the support will break. So if you own it and you don't want to take the full stop at 31.50, hey, it doesn't hurt to, you know, get out when you can. And I told some people that about Clean Spark. You know, I said if you got into that, or the other one, CHGG, which they started out okay, and then they started to give it back. Actually, this one hasn't really given it back yet. But it's like you have a choice to get out. Like Clean Spark, someone had asked me when the first pin bar showed up, when this showed up. And I said, if it takes out that pin bar low, you should probably take the earlier loss. Either that or just let it go to the stop. Well, it went to the stop, right? Today, the low is 21.69. Oh no, the stop loss is 17.25. But you had an opportunity, you had the opportunity to get out earlier. All right, and I mentioned that specifically. So sometimes you have to just do that if you don't want to take, if you're not comfortable with the larger loss, right? That's only something that you can choose. So thanks for bringing those up. And all right, so that was Blink and a couple of others. Now VMware, DJ asked about this. Ooh, DJ, we were talking about potential short, right? Buying some puts on this thing. Man, I mean, obviously they either had earnings. That's definitely news, because this thing was at the range high and it was a short candidate. This is why you have to manage risk, because this thing looked like a short. I mean, this thing had all the signs of a short, and then look, right? So if you shorted this, hopefully you're out, because that's vertical, right? That's definitely a short squeeze. And look, you're back into this resistance right here. So if your question is, let me see, you had a question about it. Extremely strong, right? Want to short, he says, right? And I understand DJ's perspective. I can understand that, but the candle is vertical. And although we've seen this where it'll go vertical and then give it back right away, there's no sell signal here. So you have a level which relates back to like December of 2019, it looks like. This is a potential short candidate, but you're fighting this vertical nature. So if anything, if you're going to short something like this, for one, it's a stock, you're better off doing it with options. Now DJ knows options, so you know I don't have to explain that to him. But options will protect you in case this thing keeps going, right? Your loss will be limited. But if it turns, I mean, for one, you should buy yourself some time, at least minimum 3 to 4 months minimum. But it's better to wait for the red candle, okay? I mean, in my opinion, because this thing may pop further. There's just nothing there right now. So you could be aggressive and try to step in front of that tomorrow. But if you get the red candle, that at least would be a little bit more of a confirmation, okay? But that's how I'd play that. I would not short the stock outright, because these things could be noisy. I mean, we remember seeing it with Groupon, where Groupon went vertical and everyone wanted to short it, and then Groupon went more vertical. So you have to always focus on risk first. I'm not telling that to DJ, I'm telling that to everyone else, because you know he knows how to play this game. So that's how I'd answer that. But definitely an aggressive candidate for a short, because there's no lower high, there's just nothing there. Just that vertical move. So that's how I'd answer that. So thank you. I'm going to wrap this up now. I'm sorry if I didn't answer your question. Man, I've been talking for a long time. I talk too much. All right, I appreciate all of your questions. There's so many that I haven't had a chance to answer. I really appreciate so much. Oh, G-Manel says VMware is being spun off from Dell, losing baggage. It's an awesome company. Oh, I agree. Dell, I'm not a big fan. So wow, okay, that's interesting. So that's why, yeah, DJ, you have to be careful with that too. That may bring in some more momentum. So better to wait for more confirmation, in my opinion, on something like that instead of stepping in front of it. Thanks for mentioning that, Gmail. Okay, so again, I appreciate everyone's questions. Again, if I missed your question, I apologize. Come to one of my other streams or whatever, and I'll try to answer it again if you just put it in the chat. So yeah, and again, wherever you are, if you're on TradingView or you're the other one, just hey, press the like button or just let me know, or whatever you do to just let me know that you like the video. The feedback is very helpful for me, okay? So I want to thank you all again for spending your afternoon with me, and I appreciate all your questions and all your participation. I will see you next time. Thank you so much for watching.